welcome to spring and warmer weather, and welcome everyone to the Sullivan & Cromwell Trading and Markets podcast. I'm Ryne Miller, your host, and I'm a partner at Sullivan & Cromwell, where I'm the co-head of our Commodities, Futures, and Derivatives practice. So over the past few months, we've talked on this podcast about CFTC and SEC enforcement, potentially their agendas over the coming year, and we've talked about what may be next for digital asset regulation. Thank you very much to everyone that has listened and to all the feedback we've received. Really terrific. If anyone wants to go back and listen to those older episodes, they are on our website. Today, we have a terrific guest, Travis Schwab. Travis is the CEO of Eventus Systems, which was founded in 2014 and is a trade surveillance solution for markets. Travis, welcome to the podcast.
Great to be here. So Travis Schwab, Eventus Systems. I've been like a lot of people in the digital asset space and the trade surveillance space, been in financial capital services industry for 25 years now, old gray-haired. And for me, Eventus Systems was a culmination of kind of all those experiences. And so I had the opportunity to spin a company out of a proprietary trading firm in Austin, Texas, with the thesis of there had to be a kind of a better way than what was being offered in the industry. As running a broker-dealer myself in several different circumstances, I went out and tried to find different solutions to help protect my backside of my company's backside. And there really wasn't ones that were resonating well, especially with the increased focus by regulators. And so knew that there was not.
Trev,
Go ahead.
I'll jump in. This is from a perspective of surveillance, of trade conduct, or what's the backside? What's the flank we're trying to protect?
When we started the company, it was really around the operation of a trading business. And so it was pretty wide scope. We were looking at reconciliation and operational and financial risk and market risk. So I was really thinking very broadly about all of the risks associated when you run a trading business, and not just one proprietarily, but when you have customers or when you're an exchange or when you're a regulator and the like. And so lots of different risks associated with that, with the act of trading. Now, where we have focused our business and where the market has kind of focused our business is around trade surveillance. Exactly like you're saying, Ryan, there are kind of three areas of surveillance in the capital markets spaces that are, kind of focused. You have voice, you have e-coms, and you have trade surveillance. And so what we talk about is all of the regulatory requirements that a firm has or an individual has or anyone has as they are trading in the markets. They have regulatory requirements as it relates to how they surveil their own activity or their client's activity and such. And so we give them a software platform to enable them to comply with their rules that they're bound to by their various regulatory statuses.
Got it. No, and that's certainly the audience we try to bring to the podcast is trading businesses, whether it's the markets themselves, the other infrastructure, or the trading firms. And I think we've had some good receptivity. In fact, I'm sure that you're familiar with a lot of our listeners as well. To focus a bit on some of the fintech or even digital asset aspects of what you're seeing, I've heard from some of your team that you guys were at the New York Department of Financial Services Tech Sprint. It's an event or program the DFS put on. What was that and how did it go?
Yeah, the DFS has been pretty ahead of the curve as it relates to digital asset and crypto regulation. They came out with a BIT license years ago. They're involved, they're engaged with the industry. And so they organized this tech sprint that was, really well organized. We had our global head of regulatory affairs, Joe Schifano, involved. He was really, really impressed, not just with the industry participation. And he said there's about 90 different participants from exchanges and vendors and different constituencies throughout the organization, but the access to regulators that they had and the Q&A periods. And so basically the NYDFS put out 4 problem statements that they were looking at. And that's, kind of real-time access to data, the risks associated with the digital asset exchange, unstructured data, and scam and ransomware sites, right? They're really trying to get their arms around how to surveil and how to regulate and how to protect all the participants. And so you had 9 teams focused on trying to provide real-world solutions to these various kind of problem statements. And we have to pat ourselves on the back a little bit. Joe's team won. They won for the most functional prototype. I don't think we get an award or prize money, but still it's an accolade that we'll run with.
Congratulations to the Eventus team and to Joe and everyone that was there. I have no doubt you guys presented with confidence and competence, as you always do.
Thank you so much.
It's interesting that DFS is doing this type of event. Not surprising, but I think you see it at the CFTC and the SEC through their labs or fintech type Q&A sessions, office hours that they're hosting. I want to transition a bit over to the SEC, but staying on this digital assets theme. One product that is continually trying to go through the SEC is in the exchange traded funds or even the exchange traded product space would be an ETF backed by Bitcoin. I'm sure you followed, as I have,
Yeah,
over the
absolutely.
past several years, a lot of proposals to the SEC to list an ETF. Nothing that I've seen go through. There's some OTC products. There's some European products that compete. I think some ETNs and other things. What do you think the SEC is looking at, or what is their reluctance? And maybe it ties back to some of the questions that DFS was looking into at the tech sprint.
Yeah, I think it does tie back, and I'll talk to that in a minute. To defend the SEC a little bit is, one, I think it was a prioritization level, and the fact that you think of the total market cap for crypto or digital assets at the time when these ETFs were going through, it wasn't even as much as Apple or a FANG stock, right? I think there was just where are our biggest issues going on, and that prioritization was kind of visible here. And then B, I think exactly to your point, there 2, 3, 4 years ago, there still wasn't a lot of the blocking and tackling that a lot of these exchanges have started to embrace. And so basically every time they rejected a Bitcoin ETF was the fact that there was so much manipulation going on in the digital asset exchange. I guess our response to that is there's manipulation going on in every asset class. So our systems pick up manipulation every single day in US equities, which you could easily argue is the safest asset class on the planet. And there's manipulation going on in crypto as well. And so there's always going to be manipulation going on. I think what is critical is, do you have the exchanges or the critical participants in this ecosystem embracing a more rigorous regime? And you do. And so we have clients that have been using our technology for 3 years now. And so those venues, and what's interesting about the crypto exchange landscape is it's so vertically oriented in the fact that other asset classes really have a lot of different constituencies, from the broker to the market maker to the exchange to the clearing to settlement. There's different groups and different companies, different vendors in each of those space, but basically an exchange does everything. And so that really puts a huge onus on these market centers to do a lot. And those ones that are embracing tools like ours and embracing more rigorous trade surveillance and AML and KYC and all those standards that some of the more traditional asset classes have embraced for many years are seeing those positive results. And so their growth is mirrored that really well. And so for us, we think it's just been a time issue. And I think, when the various issuers, whether that's WisdomTree or Van Eck or Bitwise or all these other guys that put their applications in, I think it was just a little early. And so now that you have a much more rigorous set of programs at various market centers, and you have an incoming, theoretically an incoming head of the SEC that's probably a little friendlier to this asset class, I think we should see a Bitcoin ETF this year would be my guess.
That's an interesting prediction. We'll hold you to it. I think maturity comes to these new industries and new spaces in different ways. One, like you mentioned, the comparison to Apple and FANG and equity values, it was a relatively small market. That's changed a little bit. It can go up and can go down any day. But another component or vector of maturity is just time. And we've had 3 or 4 years to see not only the exchanges continue to mature, and I think of those in the U.S. as the name brand exchanges who've built regulatory stacks that are robust, and that you would look at them and you can see where they've brought in the vendors like yourself and the types of advice and regulatory interaction that you would need to put together that response to a question from the SEC that says, where is the comfort that we've got some underlying market here that's robust and healthy and representing price discovery and not some other type of trade conduct issues. Maybe let's come at it from this perspective. If you compare the US approach to digital asset regulation to maybe the UK or something more globally, What are some of the differences you're seeing, whether it's in tone or substance?
That's a good question. I mean, if you think about markets are better, markets are bigger, the more clear and transparent the rules are, the safer the perspective is of that marketplace, and the more transparent it is. So well understood rules, safety, and transparency. And so you think about markets always become more regulated over time. It doesn't matter the marketplace, it doesn't matter the asset class. It could be tulips in Amsterdam, it could be amphora in Greece, it could be Bitcoin now. Markets always become more regulated over time. And so that series of regulations, normally starts in the US and moves across jurisdictions. Now, that's not necessarily been the case on cryptos and digital assets, right? Switzerland has taken a real lead in this space. Europe, as England, you talked about the FCA, has definitely taken a more conservative approach. The US has kind of been a bit of a mess, right? And it was a mess for quite some time. I think you have now at least the two big regulators kind of settling in where they want to settle, but that still doesn't change that there's OCC rules, there's FATF rules, there are different jurisdictions still trying to figure out where their onus is, how much they want to be involved, how it's going to affect their local regulatory regimes. And so I think the U.S. is taking an interesting role. I still don't think it's super clear, and that's going to hamper the overall adoption of this asset class until it is. And so you have, the SEC just came out with some guidance, really just less than a month ago about, when they're doing exams, how they're looking at digital assets at investment advisors and broker dealers. That kind of activity is great. I think that's really important. And then you have lack of clarity, let's say in India with financial regulators and kind of waffling back and forth. There always is lots of contrast you can find across regulatory regimes. But I think the ones that embrace the industry, ones that are kind of walking together with the industry, are going to be a much better position than ones that are trying to stop something from happening, because the market finds a way, and especially one that is so global and so technically capable.
That's really helpful perspective. A couple things I want to dwell on. First is, the incentives for regulators. We're still waiting for that congressional hearing where regulators pulled up and congratulated for doing a great job.
Right.
There has not been such a hearing in my experience so far. And then the market finds a way thing is interesting, because you've had several jurisdictions say that they quote unquote banned cryptocurrencies, and you try to square that with the activity in their jurisdiction, and it doesn't connect. And so the market does kind of find a way. And the idea of a regulator that says, I'm going to be practical, I'm going to look for our core values. So whether it's manipulation, fraud, transparency to consumers, where you can package those concerns in some way that's being addressed by the good actors in a space, then I think you've got an opportunity for regulators to step in. Let's transition out of digital assets a bit. I'm mindful that we have the CEO of Eventus Systems here, that one of the leading surveillance firms in the market. Where are you seeing, particularly from a surveillance perspective, some of the pressures on what may be next? We saw spoofing, we saw LIBOR and FX manipulation. What are the surveillance issues that some of even your clients are focused on and working with you to find solutions for?
Yeah, sure. I mean, there continues to be a intense focus on manipulation, unabated really for the last 10 years. And I don't see that stopping, especially in the future space, but in other asset classes as well, in equity. So your traditional asset classes, there is no let up, there's no end in sight, there's no lack of zeal, I would say, from a regulatory standpoint, to not focus on market manipulation. And so probably, we have 60 plus clients worldwide, 50 plus are using us for some type of manipulation surveillance along with other things. And so that continues to be an interest and a focus of regulators. And I don't see that abating anytime soon. I think what other asset classes that are ripe for, a more increased kind of regulatory focus is cash FX and cash fixed income trading. And so you've had the FX market trying to adopt a global standard of conduct, and that's, I think, been helpful, but there's not a lot of teeth behind it. And I've seen regulators from the FCA, I've seen regulators from other jurisdictions saying it doesn't go far enough. And so you have a $5 trillion market cap market that is probably going to get some more scrutiny. And we've actually had some pretty, I would call them proactive clients come to us about starting to surveil, I would say a little bit ahead of the curve, but it's coming. And I think the same thing is happening on the cash fixed income side of things. As you have that market absolutely migrating to electronic platforms from where it was, just 3 to 5 years ago, you'll have the same amount of scrutiny and interest in coming up with more robust trade surveillance mechanisms. And so huge global asset classes that are absolutely going to start resembling some of these other, equities and futures markets.
Yeah, I think without question. So maybe give you one last chance to have some thoughts here. You mentioned at the front end, voice, e-coms, and trade surveillance. Is there a magic button or box that you can put on your business, if you're a trading business, to cover all of those? Or what's the mix? And this is a big question now that I'm asking it. What's the mix that a firm brings to voice, e-coms, trade surveillance? How do they capture all of that and make sure they're doing what they're supposed to be doing?
Yeah, and what's interesting, Ryan, is the pandemic really focused that capture on the voice side and e-com side, really put that into a spotlight over the last year plus, and it continues to do so. Think of how we're talking now. Think of all the Zoom meetings. How are you surveilling Zoom meetings and the content in Zoom meetings? And how do you surveil people using WeChat or whatever mechanisms that you can communicate with? And new ones pop up all the time. And so for us, we almost have an easier side of things, the fact that our data is coming from market centers themselves and from the core vendor trading systems. And that really hasn't changed over the course of time. It absolutely has been, with the increase in volume and volatility, we've had to really be able to scale dynamically our tech stack, but from being able to handle those core data streams, that hasn't changed much for us. Now you talk about what's the balance and how do you bring all three of those worlds together. There are vendors that try to do that. We take actually a different approach. We don't think that gives you the best solution when you try to find one vendor that tries to do all three, because those are really three different disciplines. And so we work with vendors all the time in this space, whether VoxSmart or CipherTrace or Chainalysis, or all these different vendors capturing different aspects of the surveillance picture and connect the systems through APIs, right? So we can share time slices, we can share different alerts, so that you kind of, as hopefully an end user, you can take the best of breed type approach. The idea really is find the people that are really focused in those core areas that have really core competencies and make sure you're providing the best solution. And so that's where we come. And then we try to make it as easy as possible for us to work together, so to where we will work from the same commercial agreements, we'll make the APIs work together. There's lots of ways to make it as easy as we can to the end user so that they can really get the benefits of working with the best in the industry.
That's really helpful. I think the point is any trading business is its own business. If they were all the same, they could all go to a single solution. But you look to the vendors, you build your data set, whether it's alerts, whether it's automated evaluation of trading, and you build that data set, and the compliance team then comes to it and decides what they need to do with it. And I guess that's the job. Travis, really enjoyed you being able to spend time with us today. Super helpful, super interesting. So thanks for being here. My sincere thanks to Travis Schwab, the CEO of Eventus Systems, for sharing his time. For the Sullivan and Cromwell Trading and Markets podcast, I am Ryne Miller. Thanks for listening, and we'll look forward to doing this again soon.